lights, let me say hello and welcome to each and every one of you. Doug here with thelincolnlist.com, welcoming you back, or maybe welcoming you for the very first time to another daily edition of Stock Market Mutterings, where I'll do my best to take a grope in the murkiness, try to make some sense out of what it is we are seeing on these computer screens, with the goal to help you guys make some money. And I'll tell you what, it's hot and cold. Every time I see the market running like this last couple of days, I think of Katy Perry's song. What is it? Hot and cold, yes and you know. I don't want to sing it out loud. Otherwise, I'll embarrass myself and I'll probably have to pay a royalty for it. But anyway, kind of what I wanted to talk about here today is, this is one of the bigger, and the reason I want to focus on it, this is one of the bigger things that was a shift taking me from amateur to professional in trading. You know, a lot of people think there was this light bulb moment that went off in your head, like you just woke up one day and go, oh, I get it, and you just started trading like a fiend. No, it doesn't work like that. It was all these little things and these little small changes. And the more that I look back on it, it was not what I thought it would be, and probably what a lot of people think it would be. It was never those. I thought it was going to be an indicator that made all the difference, a chart pattern. I was going to unlock some sort of a secret. That was what was going to be the difference. In fact, when I was a losing trader, the trade strategies, the approach as far as selecting my stocks, how I entered my stocks, that didn't really change very much, to be honest with you. You know, didn't. What it was the management and how I managed myself and how I looked at the market, what I wanted out of it, and how I behaved. And I'll tell you what I'm talking about in a minute when I say behave as a trader. So the case in point is like today and Tuesday. You know, you have these days, you don't have any control over the market. That's where our career differs from so many things. So like, if you're a salesperson, you can be aggressive. You can pick up the phone and call people. You can push your product as hard as you want. You can do those things. If you have other types of jobs, you can be aggressive and you can push in certain times. For us, we have that overhanging market, and we have to wait for the market to do what it does first and give us the signals, then we react. Now, here's the other thing. A hot market to me may not be a hot market to you. A hot market for you might be a terrible market for me. Everybody has a strategy and a core strategy. And from that, the market kind of works with it. Stocks, maybe I shouldn't say just the market. There have to be a set of particular stocks that maybe work that way, or something like that you're trading. You know, if you're trading this particular stock and it's working the way you want, sometimes it doesn't even matter about the market. But kind of today reminds me of what I saw 2 days ago, where you had a bunch of selling and then it just flatlined. And once the first hour was over, everything was just jammed in a really tight range, and there was nothing, you know, at least for what I was looking at, was nothing. Now, where I'm going with this is everybody's going to be different. Maybe if you're out there, you banked great today, so congrats to you. And you're just, you know, that's great. That's good. That's good. And it's a hot market for you. But you're going to have days just that don't work that way. So what I'm talking about, one of these shifts was understanding when I had an edge and when I should exploit that edge. So one of the big things that I got really good at is figuring out within about 10 to 15 minutes, in most cases it's not 100% perfect, but about 10 to 15 minutes, just how this day is going to go. Like, I can see what's going to happen, the way the market opens, the way it acts, and how it's behaving between 15 and 30 minutes into the day. And I can pretty much tell you how this day is going to unfold, what we're going to see later in the day, how the rest of the morning is going to work out, and so on. What this has allowed me to do is decide that when I feel like I don't have the edge, or I don't have an edge, or I don't have the kind of edge I want, maybe I'm just looking at stuff and going, you know what, I'm not feeling it today. I don't see what I really want to see. This is not the best stuff I'm looking at. And if I'm trading, I'm not trading for victory here. I'm just trading for the sake of trading, and I don't want to do that. I want to be disciplined, and I want to save my money. I want to save my mental energy. I want to save my emotions. I want to save all of that stuff for the right moment in time. So if I look at a day and I'm like, you know, I don't like it. then I normally just sit still for a while and wait it out until I see something. Now, that doesn't mean in 15, 20 minutes I go, hey, this day sucks, and I bail. That's not how it works. I stay from open to close. I always stay from open to close because you don't know, right? You never know when something's going to come along, and I've been wrong with that a lot of times. Sometimes I'm like, this day's lame, and then it turns out to be really good. So you never know. But one of the things is I can sort of judge the edge, and I think every professional trader knows how to do that because we can't dictate what happens every day in the stock market, right? You have to work with it. It's like the ultimate demon above you, and you have to work with it. And some days that's going to be good, and some days it's not going to be. And what I'm really trying to say here is amateur traders have a tendency to do those bad habits that make them amateurs, which is chasing stocks, adding to losers, forcing trades, revenge trading, those types of habits. And I had those types of habits. So when I'm looking back and I'm saying, a lot of people ask, what was the shift from amateur to pro? How did you go from amateur to pro? It wasn't new lines, new Fibonacci's, new moving averages, new secrets. It was all of those things and more. There's definitely some more, but it was controlling those emotions, understanding the day, working within my risk parameters, and trying to go with it. So I can usually look at a day and say, this is going to be a big time day, or this is going to be a day where I'm just trying to just scout. Sometimes I'm in scout mode. Sometimes I'm in swing mode. Sometimes I'm just like, in no mode whatsoever, and sometimes I'm just in beast mode. So what I don't want to do, and what I really want you guys to focus on, is if the day isn't what you really want, don't force it. Market's going to be open tomorrow, right? It's going to be open tomorrow. And if it sucks tomorrow, it's going to be open on Monday and Tuesday and Wednesday. It's going to be open. There will be another opportunity. Just wait. And I think I did happy hour about patience recently. And that's where patience comes from. That's what I mean by being patient, not just waiting while you're in a trade, but waiting for that right moment. And when it's time for you to strike, you strike. So maybe that, for some of you people out there that are struggling, especially for you beginners out there, people that are new to it, try to focus on that. Not every day is going to be like the last day. Every trade that you take is independent of the trade that you've taken before. If you see a pattern line up 10 times, and you take all 10 of those, you'll have 10 different outcomes. Some will surprise you, some will disappoint you. That's just the way this whole trading game is. And what we really need to do is not always go out and hunt for money and focus on making bank. We need to protect ourselves, strike when we have the right means and when the time is right and when we see what it is. And for the rest of the time, save your money, save your emotions, save everything else, because that day will come and you want to be ready. So now let's go ahead and talk about some stocks, because I already kind of went through the day. Let's kind of shift over here to the webcam real quick. And like I said, today was just kind of like, was it Wednesday? No, Tuesday. It was just like Tuesday. I really didn't even trade that much. I picked up a little bit of Nvidia. I was thinking, hey, Nvidia come down here and build a really solid base. Build a really solid base here. And I was thinking, hey, this thing's probably going to come up out of range. And I took it and I got one green bar and then shellacked here on the next. And I just stopped out, basically a few pennies under my entry. And from there, it was like, I was stalking it for a short, but I never really got fired away. And it wasn't until the end of the day where things started to roll over. And by that time, I was already half asleep. So, I mean, not much there, but it was a big day yesterday. Actually, I talked about it last night. I might have been intentionally lazy because I had some NQ futures that I picked up going into the close. I talked about yesterday. And I left one contract overnight. And once you had these blowout moves on Tesla at the time and Facebook, it just sent the Qs soaring. This is a strategy I like to use sometimes too. I'm not recommending everybody trade futures. You can always use the QQQ ETF. But if a big FANG name has monstrous earnings and makes a monstrous after hours move, it's a pretty good trade to just run right into the Qs and buy those, because it's going to have this whole waterfall of sympathy down the line. Just something I'm throwing your way. It doesn't always work 100%, but it's been a pretty damn good trade. So I kept one, and I had an overnight stop on it and got hit, but it was still, man, it was huge. I mean, it was 104 point Q winner. If you guys know, even on one contract, if you know at 20 a point, that's pretty damn good. Plus what I had the day before on it. That explains it. So kind of like what I was talking about at the beginning, you know, strike when you can. That was a strike. I felt really comfortable about it. That's why I was willing to hold that overnight. And I didn't feel that comfortable with some of the stuff today. I just didn't really feel it. I wasn't feeling it, boys and girls. I wasn't feeling it, and that's just the way it goes. So let's talk about it now, because, you know, we're starting to see a little bit of a pool here. We kind of had, let's just call it a short-term blow off top right now until we get some more data. And you know, you get into a situation now, and this is just a perfect bull trap, textbook bull trap. What you saw today is when stocks in the market run up into the close like there's no tomorrow. Like the buying is just like they're just throwing money at it. Then it just keeps going, and post-market, then it gaps up the next day. It's like you got nowhere else to go. So remember what I've always said is the market's job is to run up prices high enough to make them unattractive where people want to sell. And then it'll sell off far enough to where people find it cheap again and want to buy. And I mean, you had that. We talked about that TTD yesterday. That was another one. This is just a standard blow off top where you've got a stock that began yesterday at 268, ends up running all the way up to 294 before the market at the market close, then jams on another $10 in the post market. It's like that thing was 260 to 307 in a single freaking day. And just look at that move. And it's like, you get stuff like that, man. It's like, you cannot buy up here. You can't do that. You know, I mean, maybe you can. They will let you do that. And maybe sometimes that move will work, but that's just, don't do that. It's going to be a bad habit. It's going to cost you lots of money. So anyway, let's talk about tomorrow, because I'm still, you know, even with the sell off here, it's about, let's call it like, just one day. I could see us pushing down a little bit more, and I actually think that would be a great scenario. I'm still bullish on the market unless we are trading underneath of 271. 271 is where I think if you get under that, then maybe we're talking about something different. 271, which is the lows from a couple of weeks back. I got the line right here on the chart, just sitting right over here, 271, 78s, 272s in this space right here. I could legitimately see a pullback to 279s here, and the market still be in a bullish pattern, because this was a huge move over the last week from 271 to the 290s. But I still think, like, if we're having the conversation, which I could be wrong, I always trade what actually happens, not what I think is going to happen. I'm thinking right now that you're going to see 300 on the SPY before you see 280, you know? So if you're sitting here at 286 is 287, I still think you're probably going to see 300 before you see 280, crazy as it may sound. And I might be wrong. And, you know, if the market starts dumping and it starts taking out 280, it ain't one like I won't say, okay, I was wrong, I'll start shorting, because that's exactly what I would probably do. I'm not going to sit here and say my opinion and my thoughts are right. I stopped doing that years ago. I should put that one in one of the transfers from amateur to pro. I stopped thinking it's okay to be wrong. Just don't act wrong. Just don't sit there and force your wrongness upon the market. So we'll see. And I think in a perfect scenario is actually if you sold down there tomorrow and got really close to these last couple of day lows here of 284s, you know, 283s. I would like that. Just open up and just dive bomb into some of those areas. I think would be really, really good. Now, you had some FANG names here. Well, you had some big names reporting earnings after hours. We had Amazon right here. Not what we saw yesterday. You know, Facebook, Tesla, to the moon last night. Look at this. Dead money here right now. Well, not dead money, but it didn't do anything after hours. Apple, nothing to really talk about right there. So both of those sort of just, and I don't know how that's going to, roll over into tomorrow with some of these other ones. Maybe there's going to be some good trades, especially on Apple. I've been actively trading this one now that that's out of the way. Maybe there's a chance on there. But see, a good example is what we saw today, like in Tesla. I mean, look at this thing up there at 886. Oh, man. I'm shaking my head because I've been around a long time. I remember, I'm just chuckling right now in my mind because I'm thinking about Tesla. And what I'm thinking about is I remember people thought it was overbought when it was $44. I remember people were pissed and overbought way back then. This thing's stupid at 44, and Goldman Sachs downgraded them. And here it is, man, at like the stratosphere. And I also am giggling because it's like, this is not just a pullback. Like, this is a fade. It's like, no, it's not just a fade. This is like $110. Jeez. $110 fade. Goodness gracious. You want to talk about range. 100. I mean, you only need like 3 shares of a short on that. I mean, it's just nuts. Like, I'm having a hard time digesting the verbs and the words to say $100 fade. $100 fade. Oh man, it's nasty. So anyway, let's just kind of watch them. I did mention Netflix. And this is kind of what I'm looking here a little bit for is, you get some good fades or some stocks that had not participated in the recent rally that had been very strong. So you had Roku, you have Netflix, and you have ROKU. All of these have not performed very well. And today they got some decent bounces. So I kind of want to watch those too because I think money's going to rotate back that direction. And the only one I'm really changing from what we've been talking about is I'm starting to wonder here a little bit about BABA, This thing has some weird behavior. It didn't participate in the rally. It's on about a 6 to 7 day skid here. You got a bounce yesterday. It did participate yesterday. You got a bounce, but then it's like, what a fade today. I mean, this thing just keeps getting jammed, but we'll continue to watch those big names. Theme here is this. I'm still bullish on the market. I think we see 300 before we see any significant pullback. Could be completely wrong. I'll trade accordingly. 271 to the downside, I think, is great support. Underneath of that, then maybe the whole bullish bearish argument goes to the wayside and start thinking a little more bearish. But inside of that, it doesn't matter whether it's bullish or bearish. There's both shorts and longs to be traded. That's just the market doing what the market does. But individual stocks, it's like a market of stocks instead of a stock market sometimes. So we'll kind of really pay attention to those. And I still want to stick with my names, Netflix, NVIDIA, AMD, ROKU, Pacey, TTD, Apple, and look for great opportunities, mainly to the long side, buying into those dips. So in an ideal scenario, we would begin tomorrow with a gap down, a flush into significant support on some of these names, and see some good basing, and then a red to green move and a resumption of the rally. To me, that would feel like the best scenario, the most profitable scenario, and the best risk to reward scenario for me. I don't get that. Now, if we just immediately start ripping and everything goes vertical tomorrow on a gap up, again, I'd have to question that gap up. It's like that's not really where I want to be first thing in the morning is chasing gap ups. I won't be there. I don't do that. But I think you'd have to wonder after what you saw today is like, hey, can this be trusted? We're going to need some more data and so on. So we'll just continue to stick with that plan until, shorts open up a little bit more, which we should get a little tiny test of some back supports. The market should pull a little bit off there. It was pretty bullish over the last week or so. It could use to pull back a little. So anyway, guys, if you need help, as always, come visit me. LincolnList.com. Click on the Trade Room tab. Or always just send me an email, support at LincolnList.com. Thanks for watching Market Mutterings. You like the video, click if you like it. Show your support by following this channel, keeping up with the whiteboards, the happy hours, and other stuff like that. Until tomorrow, guys, take care, trade well. Talk to you then.